all that jazz.
Oh, Lord.
All right.
Yep.
Here we go. 5, 4, 3.
What's up, guys? It's Mark Jones, the host of Key Factors Podcast, branch manager of Directions Home Loan in San Antonio, and also the founder of ReviewMyMortgage.com. And I'm here with your daily mortgage update. Today is our 2022 Masterminds Conference for our company. So you probably hear a little background noise. I'll do my best in editing to get some of that out of there, but I wanted to remain consistent with the commitment that I made to you guys, which is providing you with a mortgage update daily. And in this update today, I'm going to talk about rates real quick. I have one article that I wanted to go through and shed some light on some things and give some hope to you guys, consumers, mortgage professionals, and real estate professionals. So starting with today's rate, we're currently sitting just a tad under 3.7, which it dropped to 3.69 overnight as the national average conventional rate. Obviously, this is going to depend upon your credit score. It is going to depend on your location, but get with your mortgage professional to check those things. Let's see here. So I wanted to jump quickly into the first article that I have here, and it is found on housingwire.com. It is written by Flavia Nunez, and the title is Forbearance Rates Drop Below 1.5%. So I'm going to read this and then tell you kind of why it's important. The total number of loans in forbearance decreased by 26 basis points to 1.49% in December. Servicers' forbearance portfolio volume dropped in December to a level below 1.5%. For the first time in 18 months, the total number of loans in forbearance decreased by 26 basis points. The most notable decline was the portfolio loan and private sector. And here is something that I thought was pretty interesting. The survey included data on 36.5 million loans serviced as of December 31st. And these are all first mortgages from the servicers that maintain them. And let's see here. Maria Walsh, MBA Vice President of the Industry Analysis, said that with the number of borrowers in forbearance continuing to decrease below 750,000, the pace on monthly forbearance exits reaches the lowest level since the MBA started tracking its exit in June of 2020, kind of when the pandemic started. So she goes on to say it's likely that the remaining borrowers in forbearance have experienced either a permanent hardship that may require more complex loan workout solutions, or have encountered a recent hardship for which they are now seeking relief. And I guess to tell you why this is important is to show that, number one, our economy is, I can't say getting back to normal, but folks are finding ways to pay their mortgage so that they don't lose their property. I don't think that there's going to be as many foreclosures as we thought there were going to be initially, but only time will actually tell on that. And this is a big, I guess, topic because we've got so many people that had the opportunity to refinance, but unfortunately were in a forbearance status on their mortgage and could not do so until you made 3 consecutive payments. What a forbearance basically is letting the servicer know that you can't currently make your mortgage payment, and if they could put a stop to it and add that maybe to the rear end of the mortgage term. But a lot of folks didn't really understand fully what that meant, and when the low rates came about, they weren't able to jump on the opportunity. So if you were in this case scenario, there's still very slim, but still possibilities for you to refinance, get a lower rate, shrink your term, potentially remove mortgage insurance. So I empower you to reach out to your trusted mortgage professional. We service and originate loans here in Texas, my team at Cantera in San Antonio. So if you have any questions, we're always happy to help you with that. In closing, I wanted to leave you guys with a brief thought, which essentially has to do with consistency. It was not easy today to find time and space because we have so much going on here today with our Masterminds conference, but I made a commitment and I am going to honor that commitment. And I have to refer to the scenario of the river that cuts through rock. It doesn't do so because of the power in the water itself. It does that because of the consistency over time. So if there's anything that I want to leave you with today, if it had nothing to do with mortgage itself, it's just the simple fact that if you do something continuously over time, you will see the results. Hopefully this helped you just a little bit, but there's plenty of day left. So guys, this is your Millennial Mortgage Market Update with Mark Jones, and I will catch you on the next one, which will be Monday.